Welcome to It's the Economy. The monetary policy announcement is only 24 hours away, and for the first time, there is a range of expectations from the Reserve Bank after the shocking second quarter GDP growth number of 5.4%. Should the RBI give a rate cut and or a CRR cut, or should it desist because inflation is still above 6% as of the last available data, that is October? On the other hand, should the Reserve Bank worry about the weakening rupee and desist from too much easing too soon? Well, too many questions. And so we have one of the best experts with us to guide us as to what to expect. We have with us Arup Rakshit, Group Head Treasury at HDFC Bank. Arup, good morning and thank you very much. Well, first up, what are you expecting tomorrow?
Good morning, Latha. So tomorrow, I don't think we don't expect a rate cut from RBI. There will be no repo cut. It's too early to use the GDP number to start on the rate cut. Yes, there are concerns which is coming up on the GDP growth numbers. So there will possibly be a discussion, but we still feel it's a little time away. Earliest is Feb, maybe even April, depending on how things pan out in the coming months. If you see, there has been the October and the November seems to be having, the early indications are that the GDP seems to have been rebounding a little more than what happened in the second quarter. So to start with, I can see a rate cut.
No, I take your point. Vahan data, especially for two-wheelers and even to some extent for SUVs, has come out very good, our auto analyst was telling us. But Arup, the fear also is that there was liquidity tightening, credit growth has fallen a bit. So is there a case for a CRR cut? Also because the Reserve Bank is selling dollars. That also means further tightening, maybe even in the coming months.
There is a case for some CRR cut. Now, whether this will happen in December, little unlikely. I still think it's a little away. Maybe February, or CRR cut can happen even in between. It doesn't have to wait till February. This is not a MPC decision. See, the thing is, the system liquidity has come down. If one was to look at the last December, the liquidity is December 2nd, the liquidity stood at 92,000 crore against a 2.12 lakh crore at the beginning of November. There's also a question of durable liquidity. Now, durable liquidity has come down from a 4.8 lakh crore in beginning of October to about 1.88 lakh crore in November.
Yes.
So there is a cause and a reason why the CRR cut can happen, because RBI will have to find a way to add durable liquidity. Yes, the selling of dollars has had some amount of sucking out of the liquidity has happened. So that's a larger possibility. Will it happen in December? Unlikely.
Okay. The chances are that it has to go on supplying dollars. There is a possibility because January 20th is President Trump swearing in. It's possible that it is going to be an aggressive speech while taking over. It's possible that actions will be fired immediately because the president is coming with strength in the Senate and House as well. So is there not a case that, you have to be more careful that there is danger on the currency? I mean, where do you see the rupee basically? 84.6, where does it go?
I still think 85.5 should be a toppish level. I think that's my view, which I've held. Maybe going into next year, it may go down to 86, up to 86 levels. Going next year, fiscal is what I meant. But I don't see a complete run away into a 87 or a 90 kind of ranges.
Okay. So 85.5.
85.5, still a rupee away.
Okay.
There is a pressure on the rupee, no doubt, but and because of that, I don't expect a rate cut to immediately come through.
Okay, fair point. Rate cut, no, but the Reserve Bank. I mean, there is a reasonable argument that there is both an attack on unsecured loans, as where the risk weights were pushed back to pre-COVID levels, and there was this verbal communication to banks also to get the credit deposit ratio in place. Do you think that the deposit war needs to be brought down? And actually, when do you see this cutthroat competition for deposits declining?
So if you see the latest number, the credit growth is about 11.1,
Yeah.
and deposit growth was about 11.2. So that runaway credit growth of about a 16% and a deposit growth of about 11% with a 5% gap has actually eased out.
Okay.
But going forward, you will possibly have a credit growth more towards a 12.5% and a deposit at around 11, or maybe a little 1% higher on both sides. So there will be a gap, but it will not be a runaway gap, what we have seen earlier. So which leads to the scenario of what will happen to the deposit side. I think the rates will moderate. See, if I were to look at a little medium term over the next 1 year, March 26, I think the repo rate should be more towards a 5.75, maybe even a 5.5 kind of a thing. So 3 to 4 cuts over the next 15 months. Now, if that was to happen, the deposit rates will also start cooling down. But the problem today is the liquidity is not uniform in the banking industry. The liquidity resides with some of the nationalized banks, where the asset growth is not really at par with what is happening with possibly some of the private sector banks and a few public sector banks. So that anomaly will still force people to look at deposit rates, and there will be some amount of buying of deposits, but I think the rates itself will start cooling down.
This anomaly is old, no, for the Indian banking system. It has always been that, private sector banks are borrowers in the call market, public sector banks are the givers in the call market.
And if you see, the CD ratios are also in the same manner.
I agree. So when should I expect deposit rates to fall, you think?
So once the rates start coming down,
only after a repo cut? You think if the Reserve Bank were to supply some sustained liquidity, say 1 month repo, variable rate repo, or
or even a CRR cut.
Or CRR cut, you think that will push down deposits?
CRR cut will push down deposit rate. See, in this quarter, starting October, the CD rates came down.
Yes.
So your bulk deposit rates have come down by about a 5 to 10 basis.
Okay.
I can't say it has come down significantly, but the moment some amount of liquidity was injected into the system, the rates did come down. Come down, and it's maintaining it there. It's not going back to a 8 plus kind of a thing on bulk deposits.
Okay, help us understand the impact of CRR on the banking system. Do you think that since, every subsequent deposit will mean, every subsequent loan will mean lower CRR, you don't have to keep 4.5, 4, say if there is a 0.5% cut. Do you think it subsequently, it continuously gets easier for banks? How does CRR impact?
It continuously gets easier, but to start with, if it's a 4%, if there's a 0.5% cut, that roughly adds about a lakh or 1,15,000 crore into the system. And that's a durable liquidity which comes into the system. And then obviously subsequently also it has only a 4% requirement for every deposit you take. The other factor is on the moment the CRR is actually cash balances with RBI at a zero rate. So that bottom line impact also comes to the banks.
Okay. So there is an improvement in margins, you mean?
Marginally, say, but at least there is some improvement.
You can also cut loan rates, because if you don't want to keep too much for yourself, you can also prop up loan growth.
Yeah, I think all this will lead to some amount of rate moderation. But see, the entire, if you see the rate hike passing had not gone to the asset side fully.
Yeah.
While it came to the deposit side fully, it had not come to the asset side fully. So how much of that will immediately get passed on to the borrowers will have to be seen on what is the credit growth which is happening.
Okay. Tell us this. If there is a repo rate cut, how much does the banking system's margins get impacted? I mean, how much do they fall? If there is a CRR cut, how much do the margins increase for a typical bank?
This will be a difficult one because it will depend on each balance sheet.
So give me a range then. That's also okay.
See, it will not be significant. See, it will see the immediate repo rate cut. See, repo rate cut, you have a variable loans which are on repos. There can be some some banks have loans which are on other benchmarks also, maybe T-bills, which would have possibly got impacted already.
Yeah.
So immediate repo rate cut, and if it leads to a deposit lowering also, there will be a lag of possibly a quarter kind of a thing before the thing picks up.
Okay.
So to quantify the number will be a little difficult, but it will not be a significant kind of
Okay.
too large a number.
But would it be fair to say that the CRR cut will give you an immediate few, 4 or 5 basis points and will continue to give a margin impact?
I don't think it will be a 4-5 basis point, because it will depend on the size of the actual quantum. As I said, about 1,15,000 will come in.
Yeah.
But yes, that will come into the system, and that will give a likelihood of a better yield management from the bank's perspective. And yes, it will give a little better NIM.
Okay. Okay. Well, just a final question. Therefore, what happens tomorrow, and when is your first rate cut?
More accommodative kind of a language, possibly. What happens tomorrow is, so no rate cut tomorrow, possibly no CRR cut either, and a more accommodative language. Possibly a reworking on the overall GDP number by RBI,
Okay.
Rebalancing the even the inflation number to a little, maybe a 10 basis higher than what they have been saying so far.
All right.
And my first rate cut, earliest Feb, latest April, depending on how the geopolitical environment kicks in after 20th Jan.
Fair point. All right, you prepare us very well for the Friday policy. Thank you very much, Arup Rakshit, for joining us. So what definitely will come is a working down of the GDP forecast, a working up of the inflation forecast, just to average out the latest numbers. But Arup says no action. There is a clamour for a CRR cut. There is not much of support for a repo rate cut, at least not among bankers, bond dealers and economists. But there is always an ask and a hope. With that, we wind up on this edition of It's the Economy. After a break, Chartbusters.